Splashcreen. Wake up, motherfucker.
All right, what's up? Oh, May 31st. Okay, let's see what we got here. Got here for the week. So I think, we got a whole bunch of announcements, right? From ARM, NVIDIA, Microsoft. Everybody, everybody's preparing for that. So we got a pump for IBM. Let's see, blah, blah, blah. All right, let me get this. Okay. Let's see. No. Uh-huh. All right, semiconductors 1.4% up overnight. Korea 3% up night. Micron 4%. So we finally got our $1,000 target. That was my target. Next target is 1,200. ARM 9% up 9%. So $385 a share. Oracle up 4%. Palantir up 4 to 3%. Okay. Microsoft was up nearly 4%, up 2% now. IBM up 13, now up 7.5%. So honestly, I don't know what anybody would expect from the Bears this week. I don't think anything's going to happen. We're just going to keep drifting higher and higher and higher until SpaceX. So we got 2 weeks. That means 10 trading days. Software will definitely see which of these software companies are going to go. Also, let's see. I got this tweet. So, which are the ones that the hedge funds like to play? And here, like, I don't know what's long. Long is like what, retail? The other guys, everybody who's not a hedge fund, whatever. Okay. And I guess this is their positioning or their predictions or something. So, well, JPM. So what? This is what? Where did JPM, like JP Morgan, get this data? All right, whatever. But here we go. All right, let's see here. Microsoft up here, huh? Okay. Let's see. Consensus low or long. Okay, we got D-Dog. Okay, Palo Alto Networks. Yeah. Um, MongoDB. Okay, I guess we start talking about that. Let's go with that. Cloudflare, Net, CrowdStrike. So we know these two, CrowdStrike and Palo Alto Networks. Very good stocks up here. Oracle's moving, right? So we got that. Now let's see. Battleground. So hedge funds still not really that bullish on Palantir. Fortinet's moving down. Okay. Intuit's pushing down. Okay. Adobe down here. Yeah, we got that. CRM. Yeah, that's trash for sure. Fig. Okay, that's moving down. Well, CoreWeave is moving out of red to up. Okay, Twilio. That's gonna be interesting one here. This one's gonna be interesting because you guys asked me to look at band. So okay, if I look at band, then uh Twilio is the same, pretty much similar thing. So I looked up that company. I'm like, okay, what the hell is band? What's band? BAND. All right. And then it looked like okay, voice over I. It looks like voice over IP service as a software as a service type company. That's Twilio, isn't it? Last time I played Twilio was back in what 2019. That was a good run, and then I stopped looking at that thing because it went nowhere after that. After the COVID bubble, it's like, well, I might as well play other stuff. Why do I play that? All right, so let me pull up a chart. Let's see here. Let's see here. Let's look at Twilio and Band. All right, this is something I have not played. All right, in a long time, Twilio here. So they're in a similar area. All right, let's see. All right, let's look at the weekly. Okay. So Twilio, ZM. I forgot what the heck is Zoom. Man, I don't care about Zoom. Is that similar in relationship to Twilio? I guess. I guess you could say that. Okay, let's see. Blah 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 blah. I still don't even know what it does. Why do people need Twilio anyway? Cisco Systems has voice over IP. Why do I need Twilio? What do they do? What do they offer me that Cisco can't give me? All right, so here's Twilio. All right, I played this thing. I played this thing over here, 2018 to 2019. This move, and I never looked at it since. After it broke these moving averages here, it's like that's it. It's over. Bye bye. Go back another time. And then you had the COVID pump here. But like there's a lot of other stocks during COVID that were more interesting than that. Why would I go back? Died after the 2021 um bubble pop here. I mean the actual top was February. A lot of speculative companies that weren't like large cap companies died in February. February was the top. That's also coincides with the time of Bitcoin topping out. The crypto meme coins started dying that time too. So February was 2021 was pretty much the end for a lot of the hype. Okay, a lot of the hype died that time. The market just went sideways. The stocks that actually went up during 2021 after February were just the large caps, the large cap tech names, like Nvidia. Nvidia definitely um, wasn't one of them. After that, the interest rates started being cranked up. Ukraine war, all that die, bye bye, go back down, back to the same levels we were before COVID. Okay, so go sideways after a while, and then looks like there was some activity during this earnings. I don't know what it was, but that was temporary. It got killed then. We still go sideways at a higher level. So we went sideways down here at 55. Now we're going sideways at 100. And now we're breaking out, right? We're breaking out after the taco. Does this mean we can return back to the 2021 levels? Maybe. That's possible. All right. But there's a lot of stocks that have this look, right? You got Oracle. We got Okta. We have a lot of them right now. Which one of these will be the best plays coming into next year? So if you want to catch a dip here, what will be the best play, right? So Band is, I guess, a smaller cousin of this. So this is smaller cap. It's going to be more aggressive. It's going to be easier to push up and down. You see it built a range here, very similar to the Twilio, right? I could put Twilio up here, and you can see similarities to the price action, right? You see that? So they're kind of in the same area, regime, um, business. I don't know what's really the main difference between the two. I'm assuming they're not exactly the same. So which one of these will be the best, right? Definitely, if you look at Band, it's more obvious. You got a lot of volume coming in here. You're pushing out of the range that was built here. Same with Twilio. Twilio is going to have a harder time doing the same thing, right? So if we just go look at the zoom in to the daily, trend is good, right? We got a gap and go. Same thing, like I said, probably before with CrowdStrike, Palo Alto Network, same idea, gap and go, gap and go. Last candle here on Friday, good. So it overrides this red candle. This was the largest red candle back in Wednesday. I don't know what caused that. Maybe it was just following the rest of the software down. I don't know. I don't think software. Well, I don't know if it's even part of the IGV. It's like this is not even part of the IGV. I know Twilio is not even part of the IGV. So it's part of this ETF, Clow. Okay, so Wednesday that ETF was down for some reason. I don't think IGV was really that badly pushed down. No, it wasn't. So it was part of Cloud. I don't know what's in Cloud. Cloud has all the other cloud stocks, I guess. But since we mentioned Cloud, I put in the title there two two more leverage ETFs for you to consider. So we have let me see. Let me see what it was. What was it? Sky U. Okay, so there's one. I think this is just 2x leverage. Sky U. Um, you know, this might be something you can play if you're lazy. All right. And I still have the Twilio. You can see Twilio follows it pretty well, right? Twilio definitely follows it. I don't know if Twilio is a big component of it, but it follows it pretty well. And I can put Band, right? I can replace it with Band and then see how well Band is. But Band is a smaller cap stock, mid to small cap. So it's going to act a bit more wild, right? Higher beta, I'm assuming. That means higher risk. You're taking a big risk. Yeah, yeah, you see? Yeah. It stayed in the range in the longer, which is not bad. I mean, if you stay in the range longer, that means you're going to go up higher, right? But then, of course, it's a higher risk. So yeah, SkyU leverage, you could do it. I didn't talk about it because, like, I assumed if you wanted software, you were already in something like CrowdStrike. Okay, so this is already very risky with one stock. So if you got SkyU, you took up about the same amount of risk, in my opinion, honestly. So there's like 100%, right? From Taco to the top last week. And then if you did leverage CrowdStrike, that you would have got 200%, right? Double that up. So CRWL. So if you were just greedy and being a risk taker, you went from about 15, 16 bucks to 61. So that's about 200%, right? 200 something percent. Yeah, okay. Oh shit. It's almost 300% if you got to the exact bottom of this guy. I'm assuming most people did not buy at the seven. Let's be more let's be more realistic. Most people probably would buy around here, right? Okay, so it's like, I mean, if you got at the very bottom, okay. Well, all right, you got 300%, which is like as good or even better than SOXL semiconductor leverage. So if we did semiconductor leverage, how much is that? Yeah, it's about like I don't think people would get exactly the same. Like, okay, they will get exactly the same and be very aggressive at the bottom. Most people would probably be around here. So unless you got very aggressive at the very bottom, okay, of course, all right, you still have a hard time beating SOXL from top to bottom to top, but let's be realistic here. Most people probably would just buy a bit and start adding all the way up here to the top. And then once they're satisfied that it wasn't going to come crashing back down, yeah, sure. All right. So let's say on average, people bought between here and here, and then they just let it ride after they broke out. Okay, 200, 300%. So it's pretty similar. And so if you go back to Sky U. Okay, this is just 2x leverage, I think. I don't think this is 3x. So let's say go bottom to top. See, it's 87. So I think for me, I gave you enough ideas of which stocks to go. Leverage Oracle, leverage uh, Adobe, leverage. Who knows what else? There were other ones, and we got leverage Hut. Leverage Hut did this in 2 weeks. Like this thing took like more than a month to get to that level. Come on, leverage Hut between the bottom of the range is already like did that. Come on, bro. So from here to here is already 100%. Come on, like unless you were a crazy ass and bought it down from the taco. See, that already beats like semiconductors. Like I don't know why anybody would do leverage Hut. Uh, unless they were just complete degenerates. So there you go. And that gives you an idea of like how options work, right? Because like options, these leverage ETFs come from options. That's how they give you this leverage action. So imagine you just do your own options and then you say like I want 5x on Hut G. Like, good luck. Good luck with that. Like, there's no guarantee it would just shoot up in a straight line. And this is pretty much a straight line. So yeah, that gives you an idea of like once you get into the bubble mentality, you know, and IBM is going to be up right tomorrow. So right now, let's see, two big candles from last week into so yeah, the last 2 weeks. Okay, 17% before that. So yeah, see, we're going back to the top of this range. So once we crack this, yeah, IBM's gonna fly. It got a Trump endorsement this weekend, so this bad boy is gonna keep flying. Then IBM's a pretty good stock overall. I mean, from 2024, once it broke out of this long-term range, yeah, as a long-term stock, but now it's a meme stock pretty much over here. So you can look at it like this, right? You can look at this whole area as a range from 2018. Once we broke out in 2023 to 2024, it started changing. It's been a boring stock uh, for quite a long time. But if we look at the very, very long, like from the 90s, let's go from here to here, right? So let's do this. See, the top of the 90s was about 130, right? So you could see like we hang below it during George Bush the second. So George Bush the second, commodities, real estate were pretty much the areas, oil and gas companies, Halliburton, Chevron, Exxon. And so those companies were the dominant players during that time. Tech companies were the boring ones. So during this time, the regime shifted over there. Tech companies, which were already run up to the max during the 90s, people got burnt if they bought the top and they never came back. So you never had new buyers in the tech companies. So that was a good time. I was in grad school, and I was just buying all the cheap tech companies like AMD, Tesla, anything that was dirt cheap during that time. And I waited until like, once we got back into a tech boom. So around like 2013. So it took a long time. It took a long time before it moved anywhere because everybody was in real estate going to buy. So they took all the money they made in the 90s going to real estate. And I'm going to talk about the real estate stuff. Um, in San Francisco right now. San Francisco people are offering. I mean, the sellers are accepting shares of IPOs. So anybody in San Francisco that has shares of Anthropic, uh, OpenAI, whatever, SpaceX, it doesn't matter. Doesn't matter. They'll take it. They'll take it as payment because the competition is so fierce. It's only happening in the city, San Francisco. If you look outside the city, nothing. Like Silicon Valley, nothing. It just looks normal. Like you go to the East Bay, like Fremont, where all the Indians are, nothing. The market there hasn't shifted. So it seems like people just want to live right next to the headquarters of these cloud AI companies. Uh, it used to be that people were leaving the city, right? And they didn't care about like the cash, the clout of living inside the city. They were fine with living down in near Morgan Hill, San Jose. So if you know the Bay Area, you know what I'm talking about. Morgan Hill, Gilroy and Morgan Hill used to be farming communities. I mean, Silicon Valley used to be farms too. There used to be orchards. If you look at the Steve Jobs uh, biographies, I don't know, people who wrote about him, like, yeah, he grew up next to orange orchards. Okay, so like Campbell, Cupertino, those used to be farms, but they all got wiped out, turned into semiconductor fab sites, and the whole ground is poison now. So after building all those chips, yeah, all the ground is poison. I don't know if you want to grow anything down there. Your plants might be full of like nasty little heavy metals that were used to make all the chips. Okay, so anyhow, so 130. Okay, so now we move up. All right, so now we're moving up again. So the last time we were above this level was like during the uh, 2010 to 2013, and after that it came back down. And if I draw like semiconductors ETF over here, okay, and then I gotta change this to logarithmic. So you can see semiconductors didn't start moving up until 2013. All right. So I started working around 2010, just after about 2 years after the COVID crash. I actually didn't need to stay that long in school, but because of the recession, it didn't make sense to go to find work right away. I rather just be like, well, I could just slow down and pretend like I need to stay in school for a little bit longer, just to see what's up, wait for the economy to improve again, and then I left. And it gave me time to travel. So I spent most of my 2009, 2010 just traveling, doing nothing, kind of like Jeremy, what he's doing. So, but I have an excuse, right? It doesn't hurt my resume because on paper it says like I'm still in school, even though I practically wasn't doing anything. My research was done. I didn't need to do anything on campus, so I just goofed off and it did whatever. And I still got paid too, which was nice. But then the recession eventually hit the campuses. So by that time we were starting to run out of money. So that was a good. So I used that little 2 year buffer to then look for a job. So then I was fine. Um, so you can see once the semiconductors started moving up, IBM started going down. I don't know if there's a relationship, right? IBM wasn't exactly a top software company anymore. It's been a long time since people gave a crap about IBM as hardware or software. Nobody gave a crap about it. So if we look at Microsoft, you can see it follows semiconductors pretty well. So it looks like it was only an IBM problem. Okay, so it's pretty much following it pretty well. So let's look back at 2012. Yeah. I think this was an IBM problem. IBM just probably could not compete. Could not compete. And it was a rough time for IBM. So it's stock that went nowhere. Nobody cared about it. Pretty much nobody cared. But it built a range. It built a range between 2018 and 2024. And now we're moving up again. So with this price action here, let me get rid of this. Okay, this is interesting. Mm, hmm. Now, I don't like wide ranges, as you know, right? Like we talked about P Lab last night. P Lab, it has a wide range. Um, and you can see, like, let's see, earnings was here, and then something happened in February, crashed it. So I'm not sure what news came through that made it do this. So we had earnings late January, and then a couple weeks later, crash. So probably some kind of news, some kind of change in character here, but this forced it all the way back down to the bottom of the range, right? So even with the taco stuff, right? Nothing changed. It just went nothing. Iran war, Trump taco, whatever. It just was just stuck here near the bottom before we had this huge drop to this level, which I guess what is important now because we see it's these three areas we're touching it 2024, 2025. Okay. And yeah, okay. Yeah, that's around there. And we can see this area here, very tight range before it broke down. Now we got these two candles to deal with. So we have a large range here, some kind of, you know, a lot of activity in these two areas, right? You see that? So that means a lot of people were fighting, trying to decide if this should break down or break up from 238 and over here 300. So whatever these guys were doing, 300 and 238 seem to be very important price levels for IBM right now. That seems to be it. And now we're just going right back to this level. So very curious what's going to happen tomorrow. Are we just going to go whoop, just fly, or are we going to just have a new battle in this area and zigzag, zigzag, zigzag here again? So we got a Bart, a Bart, a Bart. So Bart Simpson head. This acts like crypto. I mean, that's pretty much what crypto does. Crypto, you have that a lot, the Bart pattern, where it's just like straight up a big battle in a range before it makes a decision either up or down. Usually it just goes back down. Like if it goes up, it just goes back down and returns to the same level. And it goes down, it goes back up. It's just like binary, very binary, right? It looks like a square wave. So it's like 0, 1, 0, 1, 0, 1, 0, 1, kind of like that. And if you look at the software companies, they have that with earnings, right? We see that. Like look at Zscaler, right? We got these stupid little earnings where only during earnings we actually have results, and then we just create these little binaries here like this. Yeah. So let's say this is a 0, 1, 2, okay, and then back to 1, something like that. It's just like, what is this? Ugh, ugly, no trend, nothing. Very, very annoying. So we got the Trump hype. So I don't know. You guys might want to look at it. You guys might want to look at it. All right, let me get back to your comments. Okay, first comment. Which AI are you using for thumbnails? I used to use Grok, but then Grok put everything in behind a paywall now. You don't have a free one. So I'm using ChatGPT. ChatGPT seems all right. Anthropic doesn't have image thing. I know Gemini has it with the nano banana, but the nano banana doesn't. I don't know. I don't like the way what's the stuff it gives me. I like Grok way better. Grok was more imaginative, even though it drew things kind of sloppily. I don't think it was very artistic. Grok wasn't very artistic. ChatGPT is much better at drawing, but the imagination, like the random stuff it would give you sometimes, it was just like, what? How did it generate that out of the prompt I made? I liked that. I liked the way it was just so yeah, it's just random, I just liked if it I liked it for the fact that it didn't listen to me. That's what I liked about Grok. I didn't want Grok to do what I told it to. I just give it like a generic prompt and like very low effort prompt, and I just wanted to see what it did. That's what I liked about it. Okay. Cloud Holding, Snow, D-Dog, Doc N, Akamai, Now, Twilio, Workday, Net, Pay. I don't know what PayC is. Shop, Zoom, I guess, Zscalers. Okay, yeah. Similar stuff. Hubs. I don't know what Hubs is. Pretty similar stuff we've been looking at so far. A lot of these stocks are in all the other ETFs too, in some form or another, right? It's just a different set of them. Like some would just have like D-Dog and they won't have Snow. They'll have a Kamai, but yeah, they'll ignore that. They won't have Twilio. Some of them will have Twilio, but they ignore Cloudflare. I don't know. Whatever. It's really random to me how they construct these ETFs nowadays. Um, makes no sense. Throw a bunch of them in the wall. Just go like, there you go. Here's an ETF for you. You keep ADG? No, no. You don't want to adjust for dividends. We're only interested in price action. If you change it for dividends, it'll mess up what you're looking at. We only care about like something with price actions. Like let me give you an example. Zim gave very big dividends, but I'm not interested in the dividends. I'm interested in the price action here. If I show you adjust by dividends, look at how different it looks. You see that? We're all the way up here. But then if I take away the dividends, we're all the way down here. It's because the dividends are so huge for Zim. Zim gave fat dividends, but the dividends I would have to pay taxes. I used to own it. So every time it gave dividends, like I got the money, but I had to pay taxes to the US and to Israel. So Israel would take off the top some money before it gave it to me, and then I would have to then report it to the IRS, and then in April I would have to pay it. So very annoying. I mean, maybe if you put it in your IRA account or whatever, but Zim is not a long-term company to hold, right? So I guess if you trade in your IRA account, you can. I was more interested in these moves here. So during COVID, it was awesome. You know, they locked down the shipping. We had like the Evergreen or Evergrande. I forgot. Evergreen, Evergrande. It got stuck in the Suez Canal. All that crazy shit happened. It was awesome. You just shot all the way up and then all the way to 2022. And then all of a sudden, bam, 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 bam. Go all, I tried to see if this thing was even viable anymore, but it looks like it tried to get up here. This was it. I was just like, okay, down here at between 11 and 15, it could probably go back to 30 at least. That day, that earnings day, it went right to the toppity top and it just went right back down and that was over. It was just like, oh crap. It's done. And I didn't even want the dividend, Get me. I don't want the dividend. I don't care about the dividend. If your price doesn't go up like it did back in COVID, why do I want your dividend? Really painful. So, yeah, dividend will distort things. You don't want dividends to adjust for dividends. You see that? Um, I mean, you could use it for the bonds like T-bill, right? T-bill. If you don't adjust for dividends, it looks like this. What the heck is this? Well, if you adjust for dividends, yeah. See, every people buy T-bill not because the price goes up. That's not what you get T-bills for. You get T-bills for the dividends. So each month or each quarter you get paid out, and you see it go up, right? There you go. But yeah, so now you understand. Hopefully you understand why. But so I do not adjust for dividend because this is a price show. If you want to talk about dividends, there are other YouTubers that talk plenty about dividends and what to do with dividends and that. This is not this show. So that's why you should not adjust for dividends because if you look at Zim, you think like people actually bought Zim and pushed it back up to this price. No, that's wrong. The dividends pushed it up back to this price. There was no trading that made it go back up to this price. So if you're buying Zim just to trade, you're looking at the wrong chart. Okay? Wrong chart. Wrong chart. All right. You're graduating undergrad, grad school. Grad school. I'm old. I'm old. Yeah. Let's see. Yeah, we're looking at band. Yes. Y'all think IBM well, we just talked about IBM, yeah, so you got my opinion on that. I've been watching net go up back 7 days. A Kami. Yeah, I haven't looked at a Kami in a while. After earnings, yeah. Okay, got pumped. Yeah. Yeah. Don't know. Don't know. All these stocks are going wild, right? Software. Everybody's going back to software. Don't know. Doc N. Let's see. Doc N. Let's see. Yeah, Doc N similar. Very similar. That's why I don't do leverage on any of these. Like this is already risky enough. I don't know about you. If you want to leverage the software, it's like, well, good luck. Good luck. It could kill you if it goes back down. It could really wipe you out because these, at any moment, bloop, this thing will just drop right back here to 99, right from 155. You're just like, what the hell? Yeah, and then net. Uh, but I did say eventually people will go back to software. They will go back. Yeah, net is pretty clean. So you kind of look at it, you're going like, oh, okay, well, and it's not really 100% just software, right? Because like it's kind of it's really important for the infrastructure net, like DocN and Akamai. Well, you could take it or leave it. Akamai used to be very important during the early days of YouTube. Akamai was the reason why YouTube was so smooth. You can open up 100,000 people can open up the same video without any lagging happen because thanks to Akamai. But I don't think people, need Akamai anymore. There's tons of competition. That's the other problem with software. There are a lot of people that can copy your idea, make it better, offer it at a cheaper price, undercut you, and then all of a sudden your stock goes down, right? Like Twilio, at any moment, Cisco could destroy Twilio if they wanted to, right? I guess if Cisco really cared, they probably could try to price them out, destroy them, whatever, and want to protect their business. They could try to do that. Cisco had Zoom before Zoom, right? Cisco, what did Cisco call their Zoom thing? Man, it was so bad too. That's why Zoom could kill them because it was so bad. The Cisco version of Zoom before there was even a Zoom, man, what was it called? I forgot already. See, that's how bad it is. It probably had a stupid name that I don't even care about. Yeah, anyway. So that's what sucks about software. Hardware is so much easier to understand because like once you have like a monopoly, nobody wants to fight you. It takes a lot of capital expenditures and infrastructure and everything just to get up off the ground. Software is just some idiot in pajamas in a dorm room, right? Any idiot in a dorm room could probably just whoop up some like code and then get their friends to help out, and all of a sudden you have Zoom, and then Zoom destroys whatever Cisco was offering. WebEx, I think it was called. Yeah, now I remember WebEx, and there was another company too that tried to get in on it called Blue Jeans, but Zoom was the one that won. Zoom was the one. Stream.me was also designed kind of like Zoom because I was using Stream.me to do presentations um and have meetings and conference calls, because it was free. Uh but then, Stream.me also had that like uh, customer base where they wanted to use it to stream. Zoom doesn't do that, right? Nobody streams off of Zoom like they do Kick or YouTube, but Stream.me, like I was just using it as a Zoom, as a free Zoom or free Blue Jeans or free WebEx. That's what I was using. Like, does anybody use WebEx? I don't think so. Probably not. DocN looks clean. Akamai looks messy. Yeah, Akamai looks more messy than DocN. DocN looks risky though. Hell, man, I'm like, what the hell? I didn't know how or why. 80. I wasn't sure which view was accurate. Glad I asked. It's a very important thing. A very important question. In stock charts, you have to use the underscore thing to get rid of the adjustment because it defaults as adjusted. So in stock charts, you got to do underscore here and then put the ticker like this. Okay, so in stock charts, you got to put the underscore. Very strange system because it's a boomer system. So I guess that because the boomers cared about dividends, so they default the view to adjusted. And so you got to be very careful if you go to stock charts to look at a chart because if a company gives a lot of big dividends like Zim did, oh man, you might get fooled and you'll be confused. There's another thing too with futures. So if I look at like natural gas futures or something crazy, let's see. Let's look at natural gas futures. Uh, there is a basis adjustment. So down here, adjust for contract changes. So there's even this might make things look a lot more different than you think. So if I adjust it for the contract, because everything rolls over. So when you do continuous contract view of futures, this is what really happens when you roll over, roll over, roll over. But when you take it away, it looks a lot different, doesn't it? And that explains to you why I don't like to stick around long term with with ETFs that track futures because they have this rollover effect. So when you look at Boyle, look at that. So if I was bullish on natural gas, it just goes all the way down because every time I roll over, I have to trade my current futures contract to a higher priced contract in the next 2 months or something, and that eats away at anything you had. So you have to sell something at a cheaper price to pay for a more expensive contract, and then you get this effect. This is why if you want to trade natural gas, it's really better you understand futures and trade futures correctly, because then you can short a future contract 2 futures out and then long a current contract or some crap like that, just to make sure you don't lose your ass. So doing ETFs with futures is a bad idea when it acts like natural gas. So you can kind of see why that is when I use the trading view basis adjustment feature, because if I don't adjust for basis, it looks like this, but when I adjust it for basis, it looks like this. So the reason why it's changing is the reason why Boyle goes down and down and down and down, because they roll over, they roll over, they roll over to the next contract. Complicated, isn't it? See, life is a lot more complicated when you get outside of normal stocks. And this is just futures. Futures is still easier to understand than options, in my opinion. If you want, if you want to play games, learn futures. It's way easier. And there's more leverage in futures where you don't have to learn complicated things, because one contract is equivalent to X amount of like movement in the S&P 500. So if I did S&P 500 futures, one contract, every time you moved up or down like 0.1% on the S&P 500, that's like a 1% move in the futures or some crap like that, just because of the way it's structured. So yeah, you can look that up. Anyhow, let's see. Didn't Ralph use Stream.me? Yeah, correct. He did. He did. He did. He did. Some companies are just one feature that a giant brand like Google or Adobe gobbles up as one of their. Yep. 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 Cisco is just a bloated ass company. They try to do everything, but they don't do everything well. Cost be moving. Guess semis are this week, maybe software next. I mean, with the IBM hype and the Microsoft hype, because Microsoft is involved with the NVIDIA ARM partnership. So ARM and NVIDIA are gonna make a CPU to compete with Apple for the low power market, right? So it's Apple ever since they left in Intel, they make their own ARM chips, right, for their own personal computer. Nvidia wants to get in on that and make their own PCs with Microsoft, right? So they're gonna team up with Microsoft, with ARM, everything, put it together to make low power devices. And I'm guessing they're going to be AI friendly. I'm assuming, right? They're going to have to try to make something that will increase the sales of NVIDIA GPUs. I don't see why NVIDIA wants to get into the CPU business unless it's a gateway, a Trojan horse, a little carrot for people to use more AI. The more people use AI, that's it. That goes into their bread and butter. CPUs doesn't give as much of a margin compared to an expensive ass GPU. So there you go. Think leverage arm is gonna pump. Yeah, leverage. I mean, arm's been pumping. I bet arm's been pumping. Arm's been pumping since Nvidia's earnings. So Nvidia earnings wasn't actually arm's earnings. So I mean, it was actually arm's earnings. I mean, yeah. So that's what was funny about Nvidia. Nvidia itself didn't do nothing, but after Nvidia reported earnings, see, you look at here, this was ARM earnings right here. Nothing. It did absolutely nothing. 2 weeks later, we had Nvidia earnings and pump. We just pumped off of that, and looks like we're done. So this huge range here, we got a small mini range here, stair step, and now we're continuing up. So that means if you did the point and figure of this whole range, right? That means we're just going up here. If you did a point and figure of this little range, this will give you like where we would be going intermediate. But let's say you were very optimistic. If you're very optimistic, you'll take this whole thing and see how far we're going to go, because it went sideways since 2024, right here, February. So all of 2024 to early 2026, and now we got this. So that's it. It's going to go a lot higher, I guess, after we confirm this. That's why I like HUT so much, because I could take this whole thing as a huge range, right? I could just take this whole thing as a huge ass range. So this was a range itself to go up to the top, right? I could count this. I could count this area, right? I could count this area here. And this will probably tell me like it should go here, around here, right? And then here it's done, and we're going up again. So now that we're up here, we got a little mini range up here. And then if we keep breaking out, then I guess we could count this whole thing as a range. This whole thing from 2021 is a range. And that means HUT can go a lot higher. A hell of a lot higher. Unless we get stuck here somewhere up here, and then we just go zigzag, 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 zigzag. Yeah, I don't know. I don't know. But ARM, could also do that, right? As we know, we are at our limit to the top. We only have 2 weeks now. 2 weeks to do this. 2 weeks. This could probably get stopped this week, right? This week might be it. That we go a little bit further and we get stuck and we get trapped and we have to build a range over here. Or worst case, we just give it all the way back and we have to build the range down here. And then because it's so large, this will have to wait until next year to figure out. Right? So yeah, this is a bubble. Man, come on. This cannot possibly keep going up like that. I don't think so. I don't think so. It'll have to stop eventually. But if Micron is still happy, then that's still happy. And if Nvidia goes back up, then for sure, yeah, we have 10 days of this, 10 days of this nonsense. Yeah, look at that. I think we're going to 1,200 for sure. Yeah, that's the next one. Unless it gets stopped really quick in the morning. Because once we got over here, it's just like, dude, bro. Like, you had to go back down like this. Failed. The Bears had the chance over here, failed. So, yeah, when you look at this long-term chart, it's just like, dude. So let's say it goes here. Micron goes to 1,200, gets stuck. We build a new level here, and then we move up. Yeah, I could see that. I could definitely see that. People hate Micron so much, man. They're shorting this thing like crazy. So what can we say? What can we say? And Palantir will be next up. Okay, so let's look at the volume. Palantir and Oracle. So pretty good volume, pretty damn good volume on Friday. You can see this range right here, right, with the volume profile here. So I think we completed. This is very good. I think what did I say the target was for DeMark? It was like 200 something. So we can probably get back up there. And then Oracle, we were goofing around here. So this is the big range of Oracle, right? We could say that this area here was the range from 2023. And kind of this wild motion. And this is why this whole earnings, yeah, something's wrong with the way they value Oracle. Like they don't really know what to do with it. Every time it's earnings, it's just like it just shoots up like crazy, gets punished, up and down, up and down. So it creates this large range. But then you see here, it's kind of like we stopped doing that. We got more of a compression here. So the ranges are getting smaller once we got down here. So this looks a little bit better. So if we take this whole thing as a range, let's say we take this whole thing as a range, and then this thing finally breaks out again, this thing can go a lot higher, right? But we have to see that first. and we have to clear this level. So all these levels have to get cleared out. Definitely have to get cleared out. But I like the fact that it calmed down. I do not like when you see this stuff here. This is not good. I would not touch it, you know? Like it's okay if you want to trade, but yeah, this is risky. The beta is too high, right? We talked about beta. Beta is like how much does this thing move compared to the markets? So if you put in this SPY, right? Like every time the market goes down, this thing just goes down a lot more, probably, right? Or if this thing starts moving up, this thing moves up a lot more. And then yeah, you don't like that. You don't really want to stick around for something that long. It's fine for trading though. Fine for trading. But this looks more convincing for anybody that wants to bet on Oracle for the long haul. So if you want to bet on Oracle for long-term stuff, because I did have Oracle from the 90s way back when, yeah, it was a boring stock. Used to be boring, kind of got interesting during COVID, got this, but still following the markets. Then for some reason, 2024, it did this, right? And then 2025, I don't understand why the volatility just went wacko over here. Like, whatever. No idea. But it looks like it's calmed down. Looks like it calmed down here. So hopefully that's a good sign. That's a good sign. So then by next year, it'll do a lot better. MU will get a pre-market pub at Dub. And you just want to yeah, you just want the crystal ball everything, huh? You just want a crystal ball everything. Heck do I know. I don't know. I have no clue what's gonna happen in the morning. I just wait for what happens in the morning and then I see something, I go like, okay, that's good. I'll trade it. More hut G. Uh well, I don't know if it's gonna be a hot thing to add more hut G. Like I rather stick around with Oracle. Like I told you guys on Thursday night, right? I said like, well, why don't you leverage up Oracle some more or whatever? Or if you did like if you're in it. Let's see. Let me go back here. Oracle, my bad. Right? I gave my hypothetical. I was like, "Oh, okay. See, we got here. We got the range, right? We got the range. Very good. We break out of the range. Sorry, my bad. Let me get this other stuff here. Hold on. Let me see. Oh, I gotta go. Okay, let me get back in like here. Let me duplicate myself. Duplicate myself. Okay. There we are. Okay, good. All right. Okay. Okay. Say, hey, it happened with the Nasdaq. Well, you don't know if it's because Micron affected the Nasdaq or the Nasdaq affected Micron. So you don't know which one started it. See, who's wagging the tail, or is the tail wagging the dog? Yeah, you don't know. See, you don't know. You don't know. You don't know. And you had several days after Tuesday to try that again, but it didn't happen. It didn't happen. Let's see, maybe more volatility due to projects, surrogate, Trump pump. Well, you already know what the options market says. The guy told you, the nerd told you, stock goes up, volatility goes up. This is not the normal regime we are in now. That means any pump will be a pump very high, and it can go a lot further than you think. So Palantir, Oracle, yeah, yeah. Okta, yeah, could be. MongoDB, yeah. All these little dumb little stocks, yes. So here, let's go. Let's get back to it. So Palantir, right? Palantir. So we are done with this range about. We're almost there. We're almost there. It probably won't be easy though. This one is not like Oracle, right? This kind of like, see this? This was a very long struggle session here. Um, okay, so between March 4th and March 24th. So even during the Iran conflict, even though it wasn't going up, right? It was at least going sideways. But nobody could decide that what they wanted to do at this price, right? They were just, looks like in the end the sellers took it back down to retest. So we might have to test this area again, and that's going to suck. Okay? So what you want to do for next week, if you really think Palantir has a good chance of breaking out past 172, then you got to clear this area very quickly. Okay? Don't be like Bitcoin. Like if you look at Bitcoin or MSTR proxy of Bitcoin, you see what happened, right? You can see what happened. It's like, oh, okay, we get back up here, and then we struggle again right here. Bitcoin was struggling, and this was because this whole area here, right? You see, this whole area here was a very important area, and then we have to wait and keep fighting here. So a lot of the Bitcoin guys very annoyed. They look at Micron, they look at now the software stuff. They're going like, what the hell? Bitcoin just won't follow them. Well, because like a lot of you guys just kept buying down here at the bottom. You have to get through it. You got to get through it. Software already been the IGV has already been spending a lot of time trying to fight its way out, and we finally broke. So if we just look at the IGV ETF, you can see like, yeah, once you broke down here, you fought, you go back down here, and then you go back here. The next levels to fight, right? We didn't spend a lot of time in this area where we broke. So this area here, where you got this gap, and then you go through, you didn't spend much time. Compare that to the Bitcoin and MSTR. This is the area where we're gonna have trouble. Not here. Once we start climbing and we're breaking out now, we're just gonna go right here, and then we're gonna have trouble. Okay, we have a lot more room to go before we're gonna have trouble. Bitcoin, MSTR already hit that area and it already had trouble. That's the reason why. Um, so so let's see. This is between November 21st through January 14th. And so let me compare it with the MSTR. When did it have its problems? Um, where it had all these issues. Let's see. So this was November, yeah, 21st through January. So this area coincides with the IGV over there. So this is where you had the problems with the Bitcoin, but Bitcoin is already there. It's already finished. It's already made its move. So of course it has to struggle, right? But software still has room. We still got room to go. So that's a major difference. So what I'm saying is like next week, because now the contracts have flipped, right? So now we're done with the options and the futures contract on Bitcoin. If Bitcoin moves up, Ethereum moves up starting next week, then that should help the software side of things too, because software is just going to be, and software will help Bitcoin as well. Like me, they'll start helping each other out, because once we get up to here, and if software doesn't spend too much time struggling here and just breaks out, because remember we only have 2 weeks before SpaceX. I don't want to stick around for SpaceX. If this thing really just breaks through and Bitcoin just really breaks through, then yeah, you could really see it go right up here, right up here. There's a lot of money in the hardware, right? In the semiconductors. If the semiconductor money just pours out a little bit, all you got to do is put a teaspoon of semiconductors out, and that will really push this up, because the IGV is a small percentage of the stock market right now compared to semiconductors. Okay. So inside the tech ETF XLK, how much of that is actually in software versus the semiconductors? Very small in software right now. It's a lot easier to push software like this with just selling a little bit of Micron and Nvidia and AMD out. So eventually the hardware side will take a break, and hopefully the people that are exiting and taking some of their profits out there will decide, hey, I'm just going to go chase some software companies, and this will help us get all the way back up here, and that will probably be the real trap. Right over here is when we'll really have the market crash. Once everything is up here, once the semiconductors are just going sideways, there's no more interest in going to another place. What would be the next place they would want to go into, right? uh I think you already hit every major tech company. I mean, the only other place would be like WebL, like go back to WebL. Remember WebL, leverage ETF for communications, like stocks in WebL. So those might be more interesting again. Um, like we could go all the way back up here. So let's see, FDN. FDN is what it's based from. So let me get the weekly. Hit the top. Damn. Yeah, I don't know. There's not much. There's nothing else then. So if WebL, FDN, the internet communication stuff is over here already. Hmm. Well, yeah, I don't see much after July at that point. I don't know what other sectors it wants to go rotating around, right? The money has to keep circulating to keep pushing the S&P at least going sideways for a bit, because once we run out of places to go hang out, we're gonna have earnings again, right? Because August comes around, people are gonna get ready for earnings reports, and they're gonna be worried about the midterms again, and that's gonna be a problem if we survive the end of June. That is the end of June. Hopefully, you survive. If you don't survive end of June, that's a problem. Yeah, you have to be in tech. Energy is not a big component of the S&P 500. Like energy was going up like what? 40, I mean 30%, right? And then it doesn't do anything with the S&P 500. S&P 500 is still sliding down. Right now, because of semiconductors, the tech component, the XLK of the S&P 500 is about 40 to 50% of the S&P 500. Okay? And 10 companies right now has pushed up the S&P 500 the last month and a half or 2 months 60%. So I could put all that money into energy, but it won't make the S&P 500 stop crashing. So if the S&P 500 really starts going down, I can't help, right? The options market says like S&P 500 has to go down. You're not going to see people running into energy stocks and then push it back up, or bank stocks, or material stock, or utilities, right? Like, oh, why don't I just buy a lot of Hawaiian Electric? No, that's not going to stop the market from going down. Yeah. Yeah. Is it possible average investor just pulls money out of the market entirely and sits on the sidelines? The average investor, I don't know. I don't know how smart the average investor is. As you can see, I think the average investor is pretty dumb, right? If they were smart and they cashed out, right? Because T bills still pay about 3 point something percent. Sure, right? They could just get into T bills or money market fund. That pays good enough that they could cash out. But I'm assuming they won't. They're just gonna leave it there, and because most of them don't even touch their 401ks at all, they'll just set it to whatever their retirement date is, right? Most people on their 401ks, they just buy 100% of the target mutual fund date. So if I retire in 2050, they will buy the mutual fund that says blah 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 2050. That's it. That's how they work. I mean, so if you're looking for 401k people, no. If you're looking for other people that actually have money, that are a little bit more active, I can't say. They probably just buy ETFs, like the SPY, the QQQ, and that's it. They don't even think that far ahead either. And then they'll just shift around between bonds and that. They'll be like, okay, well, either bonds, mutual funds, or what. That's really not going to affect things. That really isn't. But the CTAs, right? The algorithms, hedge fund managers, yeah, those guys are the ones that try to be active. Those guys are the ones that are influencing everything. They're trying to beat the market. They're always hunting for things to chase, to sell, to move, to rotate, because they're only paid on trying to beat the whole S&P 500. And if you look at the comparison of hedge funds, actively managed mutual funds, actively managed um, ETFs, they rarely, if ever, beat the S&P 500. So the average investor, which has less knowledge, which have less tools to do research, um, I guess now you have AI. Maybe some of them want to be active investors, but I believe most people, they do not want to be active investors. That's why you see a lot of people come in the chat and be like, you shouldn't listen to me because you could just buy the S&P 500," which is true. Most people shouldn't listen to me. Which is true. Most people, they're average people, and average people shouldn't be doing something outside of their knowledge base or their skill level, because uh, you're not gonna beat the S&P 500. Why bother, right? So that's why average people are average people for a reason. Yeah. Whichever moves the market most, probably. Yeah. So I think right now it seems to be the options market that's driving this. It has nothing to do with any kind of investor, really, any kind of hedge fund or investor. And not one culprit is doing this. It's just because the market structure overall, probably a combination of ETFs, leverage ETFs, 401k, systematic buying, CTAs, so commercial traded in activity, um, futures market. So it's just a combination of all these things, and foreigners buying our stock market, buying other stock markets. Right, Korea definitely probably is influencing us a lot. So all these things, all these ingredients in the soup, is causing this. So it's not one thing. Yeah, it's not one thing. But like I said, like I don't know where we're gonna hide out. We can't hide out here. IGV is the one that still has room to move up, right? Um, XLK, if we look at XLK, this thing is already taken over by semiconductors. You might as well just call XLK semiconductors uh, with a lot of baggage, like software in it. If XLK just got rid of all the software and any kind of miscellaneous hardware stuff that doesn't help it, this would just completely match and correlate with the semiconductors. So I could just add that here and see. Yeah, right. It might as well just be semiconductors at this point. Like what what's the difference? What's the difference? What's the difference? You can see down here semiconductors was underperforming in 2025, 2024, into early 2025, and that the software was helping it out, was covering it up. And then after that, you see like, well, okay, everything was moving back up, but now you can clearly see that it's just semiconductors driving everything now again. Yeah. Yeah. Ugh. Well, can't do nothing. Can't do nothing. So XLC is kind of like FDN with more things in it. Yeah, there's not much room to run here. How much left? Like you can go all the way to the top. That's just 5%. You can't hide out here either. So XLK, XLC can't do nothing. The only thing left outside of that would be XLY, right? So Lululemon, Nike, all that stuff. But even this one, there's not much room to run here. Like you gotta turn all the losers, like Lululemon, and then fix that up. Okay, so let's see. Let's look at Lulu. Lulu. Hello, Lulu. Okay, yeah, Lulu. Okay, come on. Yeah, so this is part of XLY. It's not helping it. Nike's not helping it. Um, you can see over here, Lulu was outperforming, right? Pretty much outperforming, but now it's completely not helping it out. I'm guessing the only reason XLY is still dangling here like this is because of Tesla. Because Tesla they put into the XLY category because it's a car company. So they're going like Tesla, okay, Tesla. And Ford's doing okay too. Yeah, see? This thing matches Tesla so much because Tesla, the market cap of Tesla is so huge. So, yeah, it's just like what the hell, you know? It's just ridiculously bad. So, let's see. Okay. Anyhow, yeah. Okay. I don't think I need to show anymore. Hmm. Let me look at Ford for you guys. I'll show you Ford and GM. So this is part of XLY. So all the car companies. So Ford's doing well, doing well. I didn't look at what the news that caused this push up here. But the chart doesn't look bad anymore. Like you see this range? Like I wonder how high Ford could possibly go. But man, interest rates have to go down. Like, yeah, interest rates have to go down for me to believe Ford can go a lot higher. So GM, let's look at GM. GM is definitely a lot better. Like, let's see if it can break out this. But yeah, Ford and GM and Tesla are kind of the ones that's holding up the XLY. Everything else in XLY is pretty much bad. Like, let's look at Ferrari. Ferrari released like I don't know if they put this in the XLY, like Ferrari, but Ferrari, no. Yeah, it was kind of good for a while, but yeah, you can see it rolled over. I don't know. Let me look at the monthly chart. Is this worth buying the dip? When it IPO'd out here, like here, 2016, yeah, it was pretty interesting. But now you got like, yeah, you got too many of these red candles popping up now over here. Like every little red candle is met by a green. Here we got green, small red candles, green. And then here you can see the problem, right? Red, red, green, red, red, green. Last green candle, but couldn't really mask this. And then you got the red down there. And so that's why when you look at that McKesson, the MCK stock, so look at the monthly, right? Candle up, candle down. Very serious signal. You don't need to know much about candlesticks, but up and down, taking over this. And then since then, we've been rolling over. But here you got the opposite, right? You had a big red candle and you got a big green candle. So even if there's bad news, like they don't like the electric Ferrari, they're like, oh man, look at that electric Ferrari. It looks like crap. Looks like something. I think somebody was like saying like it's so ugly the Chinese don't even want to copy it, something like that on Twitter or some shit. And it's like, you know what? Bad news, a lot of bad news is probably the time to buy. And so if we look at several months back, you look at this red candle and you got this green candle, the opposite of what happened here, right? And you're like, well, somebody is buying it. Somebody is buying it. So if you put more and more bad news or whatever is considered bad news and it can't even go below this area here, you might consider buying Ferrari. Okay. So that gives you an idea. So you can look at just based on candles, right? Just based on candles. So just right here, McKesson, green, right, and red, right there. So that kind of tells you something's bad. It's about to happen. And then when you compare with the green and red here, it's different though, because here it wasn't like a huge green candle trying to break out and then a huge red candle. There's a difference. This was trying to break out. We were getting above resistance here. And then all of a sudden you just canceled it. You see the difference? Yeah. So if we go back to Ferrari, you know, go back to Ferrari. Let's see. So this area was important here, right? This whole area here was pretty important. Looks like it was a range, It's just like once you see something like this, you're really getting suspicious, right? This and this, this and this, and then this again. And then here you're trying, and it's just like, nah, man, you're just spending way too much time and you're just making a lot of these big, big candles, but no result, no breakout, no breakout, no breakout. Everything's being canceled. And then after this, you're just done. You're just done. But here, at least like we got this. And it's building a range again. Now you got bad news. Makes me think, makes me wonder. If the bad news doesn't break it down and it stays here, then I guess maybe down the line, Ferrari is the way to go. So yeah, now you can see like what I'm doing, right? By reading all this stuff to you. I mean, chart reading for this stuff. Okay. So anyhow, let's go back let's double check what we got for tomorrow morning and then move on from there. But yeah, software is definitely the thing, definitely the play to make. Nothing interesting overnight, I guess. We got 0.6% on NASDAQ futures. Okay. And I'm assuming Kospi is up 4.45. So yeah, the Koreans are happy. The Koreans are very happy. All the Korean boomers that sold everything out and have gone all in on their stock market. So that bubble is continuing. Okay. So there you are. I think we're gonna have a good old time. Good old time. Okay, let's see. All right, back to here. Back to here. Okay, so you can take a screenshot of this. All right, and I'm done. We're done. Here's something interesting. I had Claude, FDS. What is FDS? I don't know, whatever. Whip up a spreadsheet showing me how short interest in software as a service has changed since March 31st, which was more or less the bottom. Total shares short are up 27%. Single stock short interest increased by 102%. For Vive, VEEV, I think that reports earnings this week. 98% for SAP. I think that's already reported earnings. SAP is like Oracle's competitor, kind of, in Europe. So if you know databases, you probably know either Salesforce, Oracle, and SAP. And 94% for Now, so ServiceNow, NOW, and 63% for Workday, WDAY. If you take the market value of shares short on March 31st and compare it to today, it has gone from 60 billion to 90 billion shares. That's not nothing. Market tends to do whatever causes the most pain. So during this whole time, they've been buying a lot of shorts. Or, well, not buying. I mean, short selling is actually you borrow and then sell the short. So this is not puts. This is actual people directly shorting the shares. Okay. Uh, and to that, let's be clear. If you're long semiconductor, short software as a service, you've already made a killing. So might just be time to give some back or not. So that's interesting to know. This whole time from the taco, people were still trying to short software as a service. So that would explain a lot of what we're seeing now with DocN, Akamai, and some of the others. Those companies probably also, have a lot of short interest built into those things, and they're popping right now. I'm guessing IBM tomorrow. We'll see how high it will go. I wonder how many people are shorting those things. So, yeah, I guess you could go to Claude and ask this thing too, and see if it can build you this spreadsheet. I don't know what prompt will make you this spreadsheet, but it looks like Claude can give it to you, which is very nice. Because you know how I look for short interest, I have to do this. I borrow desk. So if you don't know iborrowdesk.com, this thing uses the data from Interactive Brokers, and Interactive Brokers looks it's very nice to open this out to people. So this guy made a website that directly accesses Interactive Brokers data, and then you can look up who has the biggest shorts here. So these are all the man, people are shorting the 2x short of SMCI. So they're shorting a leverage short. Oh, man, does that mean SMCI is gonna shoot up pretty soon, or what? What? Or does that mean like they're right and SMCI is gonna go down to zero? Why would you do that one in particular? Very weird. All right. So yeah, you could check this out. But I think what's better is that this guy comes up with the whole what is it? Yeah, spreadsheet, So that's really nice. That's really nice, this spreadsheet. And it gives you a history too. So that's a lot better than using this dinky website. And I'm guessing it can go and access other brokerages and get I don't know how he got it. Maybe that's what the FDS is. Is that Fidelity? Is FDS Fidelity's thing? So he got this from Fidelity data or something? Uh, so I guess you could tweet this dude and ask him how he made this chart. I don't know. Okay, so Jesse Livermore mapped this pattern 100 years ago. So I thought this tweet was interesting. He made $100 million shorting the 1929 crash using this exact framework. Livermore's speculative chart maps how smart money distributes to retail before a major top. We're at stage 6 to 7, the first pullback after the trap. So Wyckoff when he made his methodology, he was copying people like Livermore. He was watching what these crazy traders did back in the day. And you can see they have no computer, right? They got no computer. They were just like all they could do was make like some rough plots of what they were seeing in the markets. And so this was a pattern, I suppose he saw. And this was like his bubble pattern. This was his bubble pattern. Okay, so if we do 1, 2, 3, 4, 5, 6, 7, all right, we got to 6, I suppose. I don't know how high 6 can possibly go much further than that. Maybe on the index level, on the S&P 500 level, we've already nearly hit the top, right? But that doesn't mean the stocks underneath the S&P 500 still can't keep bubbling up. So this thing can go sideways for a while, right? Before we continue on down to number 7. And as you remember, like the Elliott wave stuff is like 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5. I think people have recognized there is some kind of pattern relationship in terms of waves, but this is kind of like clouds, looking at clouds, right? Anybody could say like this is 6 and this will be a 7. Are they right or are they wrong? Maybe this isn't really the 6, right? I bet you like during um during the tariff tantrum, somebody probably drew a 6 over here and they thought, "Oh, Trump tariffs, this is probably the 6 and this will be the 7." Wrong. That would have been wrong, right? It just went halfway and then it just went right back up. So this is why I don't like this type of stuff where people just kind of look at these patterns and then go like, "Oh, I see the pattern over here. Oh, I see the pattern over there." That's not enough information. That's really just looking at clouds and going like, "I see a bear, I see a panda, I see a raccoon, I see a bat, I see a dinosaur, yeah, I see a stegosaurus, I see a T-Rex." Yeah, you know what I mean? No. This is fun, okay, but I wouldn't be taking this thing too seriously for now. So you're gonna need some confirmation that this actually will result in a 7. What do we know so far? We know so far that the cycles say June is probably the top. I went through the cycles again. It still confirms June is the top. And then after that, we're just gonna go kind of sideways ish and then start moving down in July, August, sometime around there, before we hit some kind of bottom around October. Okay, October, it will be the bottom. Now, some sectors like software can go higher for longer in through July if we can survive that. So even if semiconductors start rolling over and all that other stuff, software is where I would be concentrated in right now. What about the cup and handle, head and shoulders? Yeah, I don't talk about that shit because that's crap. Yeah. But you can see this is when like all this stuff started happening, right? Once people started drawing graphs like this, then they started trying to look for some pattern somewhere, some way. Um, and you're going to have to find rules. You're going to have to find rules. What rules specify that this is of the 4, 5, and 6 anyway? So you're going to, this is not enough. This is not enough for me to be convinced. But it is possible because if I look at the cycles, I do see a top because I said the bottom would be end of March, early April. That was correct, right? Based on the cycles. The top will be June, so we still haven't hit there yet. We got SpaceX to get through. We'll see if that's a top of some sort, but it probably won't affect everybody. Probably mainly semiconductors right now, and that money will just spill over into software, which we are already seeing. So on Thursday, right, said look at Oracle, look at Palantir, and those are going up. And then I see nothing stopping the cybersecurity one. Cybersecurity is still going up. Okay, so this is what Michael Burry was yapping about. So we got Michael Burry here, blah, 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 blah. Okay, take a screenshot of this. This is so messy. I don't know what he's saying here. So luckily, somebody else cleaned it up for me. But let's read what he tweeted. So Michael Burry Big Short said there are good reasons for this. Jim, who's Jim? Oh, Jim Cramer. Okay, he's responding. Jim Cramer. It is all Fugazi. How to make tens of billions worth of NVIDIA GPUs disappear from balance sheets in 8 to 12 Byzantine steps. What? Okay, is that a word? STEP step SPVS. Okay, I don't know. Was that misspelled of some sort? All right, so this guy kindly cleaned it up. So you can take a screenshot of this instead of this one. Okay, this is messy. But here is the Big Short Part 2, I guess. So if you think Nvidia is going to crash the markets, then this is probably it. All right, Nvidia chipmaker sells 100,000 GB200 GPUs at $5.4 billion to SPV. So that's what SPV means. Steps. What is SPV? I don't know. Books to completed sale revenue. All right, here we go. Okay, so this is what it is. Valor SPV, special purpose vehicle. Shell entity holds legal title to 100,000 GPUs, no operating business. Okay, now we go down. 5.4 billion GPUs owned by SPV as collateral to Apollo Asset Manager. $834 billion private credit platform arranges financing secured by the GPUs. So it goes down. $3.5 billion senior secured debt to SPV. Debt securitization. Sounds familiar, doesn't it? 2007 again. Okay, Apollo vehicle debt to package into securities. Oh man. Okay, mortgage-backed securities. Here we go. Part 2. Notes and sold to investors. Going down here, Athene, Apollo's insurer, buys the debt securities and holds them in its portfolio. Goes down to 7, annuity holders, American retirees. Their annuity premiums ultimately fund Athene's portfolio. They bear the credit risk. So if this whole thing collapses, then the government has to bail out all those pension funds, right? So is that what he's talking about? Okay, whatever. Here we go. Anyhow, so what do you say are the top software picks right now? Yeah, I mean, I like the Palantir Oracle charts like for now, but I mean before Palantir and Oracle, my favorites were the cybersecurity ones, right? So those were the strongest in the IGV, CrowdStrike and Palo Alto Networks. But I never did the leverage on those. Those are already up really high. So I don't know if you want to chase them if you're not even in them yet. So I would recommend that if you did not buy those cybersecurity stocks, when because after I sold WebL, that's where I put them in. So a little bit Oracle, Adobe, CrowdStrike, Palo Alto Networks, and that was like the major parts of it. I didn't do Okta, I didn't do Now. I tried to do CoreWeave a little bit, then I got tired of that one. I said, "Hell no, no more." CoreWeave is not even software, but so I don't know why they even, not really anyway. So okay, fake the bubble to make the bubble. Yeah, yeah, sure, sure, sure. So I had this other tweet before Michael Burry tweeted that one. This was like a couple days before. This tweet got deleted for some reason. I don't know why he deleted it. Leaked. The company that spent $500 million on Claude in 1 month was Amazon. So nobody knew who it was, and this guy claims it's Amazon. So maybe he deleted it because maybe Amazon threatened to sue him. But he says this: the 500 million increase in Anthropic ARR by $6 billion and increases the valuation of Anthropic by 128 billion. Latest raise was at a 21x revenue multiple. In turn, increases Amazon's equity in Anthropic by 20 billion. So Amazon owns Anthropic 15 to 19% of the shares or whatever. 15 to 19 what exactly? I guess shares. Spend $500 million in 1 month and have a net worth go up by 20 billion. Who wouldn't take a sweet deal? So there was a whole bunch of noise on Twitter about like, oh, who the hell spent so many tokens on Anthropic? And this guy was like, "Oh, stop doing that, bro. Stop wasting all our money on Anthropic." But if it's Amazon that did that, then they did that on purpose. So then I responded by saying, "So you're saying Amazon chairman Bezos figured out how to become the US Federal Reserve with his own version of QE?" That's basically what it is, right? So you pumped your own stock that you own by spending something behind the curtain, just like the Federal Reserve does. So this is what I'm saying. I'm saying the fact that like in 2022, it was easy to predict the stock market before AI because all you had to do was look at how much money was in the treasury, the US Treasury account, how much the banks were taking from reverse repo, and how much was in the Federal Reserve balance sheet. But after 2022, once we had ChatGPT released, the market started going back up, and then it went back up a lot higher than what that model predicted. So at that point, I was thinking like, well, there's something else driving it, right? Uh, from behind the scenes. Now, a lot of people got mad in 2023. They were like, recession, there should be a recession now. Come on, we should have a recession. How come the stock market doesn't crash? And people got pissed in 2023. A lot of people were saying it was supposed to be a crash, and it didn't happen. And I think now we know why it didn't happen because all this AI build out, people spending money in the back end, doing all this stuff is driving the markets up in private equity. Private equity is driving this up. So we actually do have a source of liquidity. It's just not public. You don't see it. You don't see it. Oh yeah, NBIS. Yeah, yeah, yeah. I sold some of my hut stuff and I went to NBIS with my profit there. So I'm glad I bought NBIS on those dips. So definitely good replacement for core weave. Anyhow, there we go. I think this explains to you why things are happening. And now Michael Burry is doing this shit. Yeah, there's something happening in the private sector, the private credit markets that's driving the public markets. And now we see it. We now see it. So, anyway, IBM up 6% overnight. Microsoft, pretty much 2%, no change. Let's see, Palantir, 2.4%. Oracle overnight, let's see, 2.66%, so down from its high already. ARM 7.7, ARM still winning. Micron 3.2, still okay, and Korea 2.8% on the EWY ETF, and 1.28. So Taiwan still doing all right, but pretty much not helping out too much. Okay, we're done. Done. Okay, so this is the big thing this week. Okay, the Windows PC CPU that NVIDIA is going to put out using ARM architecture. So let's go. First, Windows PCs powered by NVIDIA chips to debut next week. The company best known for powering the AI boom is coming for the PC. NVIDIA is expected next week to debut the first Windows computers that use its chips as the main processor. Sources confirmed it to Axios. Microsoft's first AI PC push stumbled. Oh, so Microsoft tried this before, huh? Well, now you got Nvidia's help this time, but Nvidia's arrival gives it a second chance. This time with the world's hottest chip maker attached. Nvidia and Microsoft will unveil their joint work and the first computers running the chips at two key industry conferences, the Computex trade show in Taiwan and Microsoft's Build Developer Conference in San Francisco. Nvidia powered PCs are expected both from Microsoft's homegrown Surface brand as well as other computer makers, including Dell, sources confirmed. Microsoft is also expected to debut software that makes it easier for people to have AI agents do work locally on their Windows computer. A Microsoft representative declined to comment. Dell declined to comment. NVIDIA did not immediately respond to a request to comment. Yeah, they're all gonna pump next week, right? They're all gonna keep pumping. Nvidia, which got its start making PC graphics chips, has been working on entering the PC processor business for years now, though only recently has it become clear that the debut was imminent. A new era of PC, Nvidia teased in a Friday post on X, pointing to coordinates that matched a location in Taiwan. Meanwhile, Windows head Pavan Davuluri engaged in his own vague posting. Something new is incoming for developers, he said on X. And no, it's not a new OS version, but see you at Build next week. The move comes as Microsoft is trying to reposition Windows to take advantage of the massive momentum behind AI. Microsoft's first effort in at an AI PC, the Copilot plus PC. Oh my god, fuck Copilot, trash. Anyway, was marred by a series of setbacks, including a lengthy delay and security concerns over its signature feature recall. However, the move towards agents that can automatically perform tasks on local PCs has provided what it sees as a fresh opening. The company has been embracing OpenClaw since earlier this year, creating a new team led by veteran coder Omar Shahini. The company also has OpenClaw founder Peter Steinberger, now employed by OpenAI, scheduled to host a breakout session at Build. Okay, all right. Anyhow, let's see. Nvidia's entry in the PC market could not only help not only it and Microsoft, but also rival Qualcomm, which uses a similar type of chip as Nvidia rather than the traditional PC chip architecture used by Intel and AMD. That's true. That's true. So I think a lot of these guys, yeah, they just okay. Oh man, that's really gonna eat away at the uh, chances of Intel trying to get to $200 a share before it crashes and burns. So Intel might be having trouble getting up to that price level. All right, so let's talk about San Francisco since we're Microsoft is going to go down there. Might as well talk about the whole San Francisco AI boom market. So I am wondering if I should tell my parents to dump their condo into the market. The thing is, it's a condo though. It's not a actual single family house. So I doubt they can take advantage of this right now. But this is what's happening. AI boom upends San Francisco housing market. The Bay Area boasts the highest median home prices in the country and experienced the sharpest annual price increases. Okay, so this was written in May 29th. All right. When Alex Belton and her fiance started their search for a single family house in San Francisco last fall, their budget was $1.2 million. After being repeatedly outbid, it has increased to $1.5 million. And they have switched their search to Marin County. So that's up north from San Francisco, okay, across the Golden Gate Bridge, where Tupac grew up. So Tupac was Tupac really ghetto if he lived in Marin County? I don't know. Anyway, where the median home price is slightly lower. Our new pastime is crunching numbers because I just feel like we're just constantly trying to reevaluate and see, can we afford to up the budget? Said Miss Belton, who works as a nurse in the city. She is among the many people struggling with San Francisco's increasingly competitive housing market, as the artificial intelligence boom has created extreme personal wealth across the region. Technology companies are paying AI employees lofty salaries, with some researchers negotiating $250 million pay packages, and AI companies are shattering fundraising records. The median home price, sale price in the San Francisco metro area increased more than 10% in April from a year earlier to $1.7 million, according to a recent report by Redfin. The metro area now boasts the highest median home price in the country. The shift comes after San Francisco's national reputation plunged during the pandemic, when headlines about petty crime, public drug use, and tent encampments raised worries about its future. The city's constrained housing supply has added to that pressure. Well, San Francisco is always going to be like that. San Francisco is basically like a little island. Um, and that's just how it's always going to be, unless they're going to allow like people to build these huge skyscrapers, which might be happening. You can see how tight it is. There's only like two little freeways that go through it. You just live around here, right here. You're just right next to this. I don't know. It was a fun place to grow up in, though. Um, It had a nice little town feeling. It was a little town. It was a little town that kind of acted like a city, but not really a city. Okay, since the launch of ChatGPT in 2022, house prices in Bay Area's luxury zip codes have sharply risen, as prices in the most affordable zip codes have fallen. According to recent data from Redfin, the divergence in growth rate between luxury and non-luxury markets did not exist before ChatGPT's release and is not common to other major markets. Okay, I'll tell you something. Every time I go see my parents, there's a new for sale sign around the hood. And every time it gets snapped up, the new guy, they break down the house. The guy tears down the whole house and then builds a new house and then converts it up. Like the money being poured into San Francisco real estate is crazy in certain neighborhoods, not every neighborhood. The neighborhood where my parents are used to be a middle class, working class area. Now it's turned all into rich, like it. Okay, so the very rich would in San Francisco, they would live like Nancy Pelosi and Gavin Newsom and all their family and Larry Ellison from Oracle. They would live around kind of near the Presidio. So Pacific Heights, kind of like that area, near the embassies too. A lot of the embassies would be around that area. So that's where the really rich, like the Devil Wears Prada was filmed in one of those huge mansions. So Devil Wears Prada. So that's not where my parents are. All right. There's no way they would have bought like oh yeah, they're immigrants from Vietnam, and they would instantly buy like a freaking a 5, 10, 15, $20 million man, like little, like it's not even a mansion. Okay. It's like it's still small. There's not much size there. So those things, no way, no access. But the neighborhood they're living in now, these rich guys are coming in, they're just snapping up the houses and tearing them down. They're not turning them into mansions, though. You gotta you're gonna have to tear down a bunch of houses nearby and buy everybody out. That's not gonna happen. But they're rich enough to like customize their house the way they want to. So they just want the land, and they're just turning it all upside the head. So and they call it luxury. So they repackage it and say it's luxury now. So what used to be like a middle class, working class house, you know, that could have 1 to 2 families in it, right? You could take that house, turn it into like a mini condo where you just share 2 units, or you could just turn that into a big single family house, I guess, right? Really big. But the thing is, they're just tearing it all down and turning it into a luxury, like little unit or whatever. It's like, what the fuck? That's what they're doing. Yeah, really weird. Yeah, poo on your sidewalk is free. Yeah, I told Ava when she came here to get the poo app so that she didn't step on poo. I think she did step on poo though. So you gotta if you come to San Francisco, you gotta download the poo app and it'll update you on dog poop and human feces and it'll tell you where it is. Yeah, so that's where it is. I remember when Sam and Andy pooped in Pelosi's driveway. Yeah, they have a lot of security out there now. You don't want to do that nowadays. You don't want to do that nowadays. Okay. What's different this time is that the benefits or the prosperity of AI seems much more concentrated. Um, said Daryl Fairweather, the chief economist at Redfin. It's not that everybody is going out and buying homes. Oh, really? Um, I beg to differ. For Mason McDowell, a real estate agent in San Francisco for about 10 years, demand from all cash buyers seemed to spike overnight in mid-October last year and has not let up. This coincided with a moment when more than 600 current and former OpenAI employees sold their shares. The Wall Street Journal reported, making $6.6 billion collectively. So each of these guys basically got $1 billion. Some of Mr. McDowell's clients working in the AI industry were at times offering millions of dollars over the asking price in all cash, agreeing to quickly close and waiving contingencies, such as the right to inspect the house before buying. Well, now you know why. I told you why. Because they don't even want the house. They just want the land. They get the house, they tear it down because guess what? They're filthy rich. They don't need to. They don't care about what your house is. They just want the land. They just want the lot, and they're just gonna tear it down anyway. Why do they give a crap? They're so rich. They're so rich, man. They can just rebuild it however they want to rebuild it. I wrote multiple offers for all of these clients that were $1 million over the asking price, and we weren't even. Alex Lurie, executive vice president of City Real Estate in San Francisco, and the half brother of Mayor Daniel Lurie. Daniel Lurie, the current mayor, is the heir of the Levi Strauss um, company. Okay, so Levi Strauss started in San Francisco. Okay. They sold jeans to the 49ers. So ancient company here. So this guy got all that money behind him. Said most of the buyers he works with on homes listed at $5 million or more haven't benefited from the AI gold rush, either as employees or investors, and are making all cash offers. The competitive housing market goes beyond the AI frenzy, he added, noting that return to office mandates have also contributed to the booming market. This has been the most robust market we have ever seen, said Mr. Lurie, who has worked in the city's real estate market for more than 12 years. Let me see if I recognize where this St. Francis Circle. So this either is St. Francis Circle or Forest Hill. So there's like these little nice little spots, like little enclaves in San Francisco where all of a sudden it just becomes filthy rich. So these are also certain areas. I don't like this place though because it gets really cold. The fog, the San Francisco fog would come roll in, and this would get really cold. Just a day after Mr. Lurie and his business partner listed a 4-bedroom, 5-bathroom house for $3,995,000 in Pacific Heights. Yeah, that's why I told you Pacific Heights is where you want to be if you're filthy rich. Earlier this month, it received multiple offers and sold for $7 million a week later. The neighborhood is among the most expensive in the country. Anthropic and OpenAI, the tech industry's leading startups, are headquartered in San Francisco, where many of their employees work from offices in the city. Many real estate agents said they expect strong housing demand to continue as OpenAI prepares to file for an IPO in the coming weeks. And Anthropic has also taken steps to go public. An IPO boom would likely create a new flood of generational wealth. Oh, man, I don't know. I don't think my parents would benefit, but if they get so desperate to buy any kind of house in San Francisco, fuck, dude. That that little tiny condo box, which is just like less than like what 1,500 square foot. Man, if that thing could sell for 2 million, dude, they bought it for like 100,000. They could sell for 2 million. So they can add that on top of their Apple and their whatever shares they have, and then, bro, I might be in trouble. I might get taxed by IRS when they die, and they have to like fuck. Anyway, holy shit, holy shit. Yeah, this is wild. This is wild. Okay, let's see. Okay, see, Restream is saying something here, blah, blah, blah. I don't know. Let's see. Hopefully. Okay. There was something wrong with the Restream with the chat. Hopefully nothing's wrong. I can see your chats. So residential rents in the city have also soared in recent years, driven by the same factors. Miss Belton, 33, and her fiance rented a 2-bedroom, 2-bathroom apartment in the Marina District. So that's a typical sized house. Yeah, you'll get that. For 3,695 in 2020, when the city's rental prices were low amid COVID-19 pandemic. This year, rent increased by about 10% to 4,075. 4,075, 2-bedroom, 2-bath. Man, you're lucky it only went up 10%. Somebody else could have got gouged by living. Marina is a really nice place. Like it's right by the big park there, Chrissy Field. Um, It's right by the Presidio, which is probably a lot of the AI startups also probably have offices near the Presidio. Um, Shoot, man. And there's a lot of nice bars there too on Chestnut. Making their search to buy feel good, or what the hell? Making their search to buy feel more urgent. The irony is that even though Miss Belton knows the AI boom is making it harder for her to buy, she is still using artificial intelligence to help her buy a home. How ironic. It's funny that AI is part of the problem here, but we've actually been using Claude. She said, we've been using AI to crunch our numbers. Yeah, well, keep helping the man. You're not fighting the machine, all right? You're not fighting the system here by doing that. Good job. Okay, so let me show you another thing. Let's see what we got. What we got. Showed you that, showed you that. Okay. Must be on this side. All right. Let me find it. Let me find it. So, this one is interesting. Look at this. $3 million Zillow filing in San Francisco. Anthropic or OpenAI stock will be considered as payments. So, yeah, if you don't have cash to outbid somebody else, we'll accept your shares though. Just transfer your shares over to me. Wait, can they do that? So before the lockup period, can you transfer the ownership of the shares to someone else, or do you have to put it in some weird escrow and then wait until the lockup period expires, and then they have to sell the shares, and then they can transfer it to your name or something, or what? This is bizarre. How does this work? Forget cash buyers. The final boss of San Francisco real estate is a 28-year-old MTS offering pure pre-AGI equity. Oh my God. What is this? What is this? Yeah, so 160 No Street. This is where a lot of the Google guys used to hang out. So this is by the Castro area too. So a lot of gays. So, and gays are very rich. So any gays that survived San Francisco through the 90s, .com and whatever, they haven't been priced out of the game. Yeah, they're filthy wealthy. Yeah. And also, like, Zuckerberg has like a house by Dolores, so not too far from where Zuckerberg lives, probably this area. 3 beds, 2 baths, 2,500. See, it's a box. This is shit. This shit's a box. Come on, it's a tiny box, dude. And they're willing to pay three mil for this thing. Why not rent it out while gaining equity and sell later when it's pumped? Renting in San Francisco is very bad. The renters' rights are so good here. Like, if my parents did want to rent, the way you would do it, here's a pro tip. The way you would do it is you would only rent to students who go to school here. So UCSF students are like the primary target. Okay. Not the state, San Francisco State. Okay. Like, I'm talking about like medical students. They really won't mess around, so they're unlikely to fuck up your place, and they'll leave too. They'll be gone, so they won't stay for long. So you won't have to worry about them like trying to fight you and stay in there and then like argue with the rent. Yeah. So yeah, DARPA to Meta. Yeah, that's correct. Yeah, that's correct. Yeah, that's what Be Brave, right? Yeah, I remember I talked with Be Brave about it. Yeah, it's like, yeah, I agree with you. Yeah, I understand. I know where semiconductors came from. Yeah, I know the history. Yeah, you know, William Shockley, Fairchild Semiconductors. Yeah, DARPA created the internet. A lot of programs create semiconductors. Yeah, I know, I know, I know, I know. Yeah, yeah, Be Brave. I got you. Anyhow, yeah. You could run the urban landlord West Coast circuit. Oh my god, I can't do that shit. This is the reason I got into the stock market. I don't want to deal with motherfuckers, man. It's just like, ugh. John really enjoys it. So unless you really enjoy fucking with people and shit, I'm not interested. All right, here's some other news. Let's see how much I can read. So we got through this. Let's see if I can wrap this up here. Billionaire families are reducing their exposure to the U.S., where they are looking to invest instead. 2/3 of UBS managed family offices see waning confidence in the U.S. dollar over the next year. Worries about long-term uncertainty are reshaping portfolios as wealthy families are cutting their exposure to the US and may shift to Western Europe and China. More than a quarter of the Swiss investment bank's clients in its global family office either have already reduced or plan to minimize their holdings in dollar assets, driven by worries that the reserve currency is weakening. According to the department's annual report, which is based on the opinions of 307 clients from over 30 regions internationally from families worth an average of $2.7 billion. Family offices are reconsidering their dollar exposure, potentially led by concerns around a potential debt crisis, geopolitical influence, and concentration risk within global portfolios. Jason Rhodes, content market strategist at UBS Global Wealth Management Unit, wrote in the study. Two-thirds of the group's family office expect diminished confidence in the American currency's reserve role over the next year. Only 6% expect an improvement. The value of the dollar has dipped since President Donald Trump's inauguration for a second term in January of last year, as investors are concerned about potential fallout from tariffs on the U.S. trading partners and the risk of a trade war. The U.S. dollar index DXY Dixie, which measures the value of the dollar against a basket of 6 other major currencies, mainly the euro, the yen, British pound, Swiss franc, and Canadian dollar, is down about 7.5% in that period, though boosted in the month following the start of the war in Iran. The UBS report found that almost half of family offices think they're overexposed to the dollar, while just 8% believe their exposure to the British pound is too high, and 7% said the same about the euro. Okay, and while American clients are increasing their asset allocation in the US, many European and Asian Pacific family offices are looking to rebalance their portfolios with interest increasing for investments in China and Western Europe. Rhodes wrote. Perceptions of risk are also helping to define portfolio construction. About 60% of family offices are worried about significant political conflict, and over half foresee a major debt crisis over the next 5 years. Compared with UBS's report last year, concerns have grown among clients about geopolitical conflicts. Not many expect that tensions will ease soon. No shit. All right, here's the last one. Let's see how far I can get here, but maybe I'll have to continue this tomorrow. Retiring boomers broke this economic relationship. What is this relationship here? The employment level tends to bottom about 1 year after the stock market. Tops are coincident. Okay, so let's see. S&P 500, and then this one is the civilian employment level as percent of population. Okay. So full employment with boomers retiring. Okay. So this will tell me when the stock market bottom, huh? The employment level as a percentage of the US population continues to fall even though the stock market has been rising. That breaks a long-standing relationship shown in this week's chart. Normally, the employment level as a percentage of the population bottoms about a year after an important stock market bottom. The last such price bottom was September 2022 on a monthly basis. That should have meant a bottom for the employment population ratio about September 2023. Instead, it has kept falling. Uh-huh. The unemployment rate has done fine the whole time, ranging from the high threes to the low fours now. So it is not a problem so much of people not being able, I guess I should say being able to find work. Rather, you can blame the retiring baby boom generation who are deciding not to stay in the workforce. Oh, really? Okay. Oh man. So I guess we can read this tomorrow. Let's see what's up. I mean, I've been hearing stuff where like it's like baby boomers are trying to stay longer or coming back to work now too. I don't know. I don't know what's going on. What to believe? What to believe? Is this AI too? So or the immigration they claim like everybody's kicking out all the illegals. Dude, I don't know. I don't know. Bought some groceries today. Everything went up 20% from last month. Oh lordy. Oh, it's already happening. The pass through is already happening. Yeah, it's gonna get worse. It's gonna keep getting worse. Like we haven't even got the wheat and the soybeans yet and all that crap. That's gonna affect everything. That's why you shouldn't buy processed food, right? The corn with the damn like syrup, high fructose corn syrup, and then the preservatives, and they dump a bunch of soy in there, right? They put the soybean oil or soybean meal. They'll find a way to stuff it in there, and yeah, you should. Oh, that's gonna affect everything. Shit. Anyway, supposedly we're only a few weeks away from an oil going for 150. Man, that Hormuz is already closed. Yeah, so I don't know. I mean, it's already been closed. People don't really care. They're going through. I saw Japan use up all its reserves. So if Japan has got all that gold they're smuggling in to resell out, and they're using that to buy, try to get access to oil, that's gonna be a problem because their reserves are already dwindling. Yeah, they already dumped a huge amount of their reserves into the system. So yeah, we'll see. We'll see in August. I think that'll probably show up in August. Pretty sure, if not July. So we got a few more weeks, right? So for now, go all in software. Just keep trading. Good luck. So I'll see you. See you tomorrow. I don't know if something really interesting in the morning happens. I'll show up. I don't know when the whole chip announcement will be. So I don't have a timeline. I don't think anybody has a timeline. Everybody's like, it's a surprise. It's a surprise. Okay, great. Surprise us. I hope that's not the top though. If they surprise us and the stock, like the semiconductors goes down, hopefully the software won't follow that. So wait for the news. See if the news causes the top. Usually when you have good news, it causes a top, right? It's probably when Trump says like, "Oh, okay, we have permanence, we have peace deal now." That's probably the top too. So anytime there's good news, that's probably the top. So watch for that. All right, see ya.